Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 26th of March 2022 and we're publishing our gold and silver weekly update for the week ending the 25th of March. Well, this past week gold and silver prices certainly had their ups and downs, though within relatively modest or reasonable margins. Recovering well though on Thursday, falling back slightly on Friday, but again attempting a staged recovery towards the end of the day. So let's take a look. Let's look first at gold and silver prices. Gold rose $37 last week, rising from $1,922 to $1,959, having hit a high of $1,966 and a low of $1,911, a rise of 1.9%. In sterling terms, gold finished the week at £1,485, that's up £27, and in euros it closed at €1,783, that's up €44. Silver rose 57 cents, rising from $24.99 to $25.56, having hit a high of $25.86 and a low of $24.61, a lower high and a higher low than the previous week, and rounded the week off with a rise of 2.3%. Now in sterling terms, silver closed at £19.37, that's up 42 pence on the week, and in euros it closed at 23.27 euros, that's up 0.68 euros. And the gold to silver ratio fell, ever so slightly really, from 76.9 to 1 to 76.6 to 1. Bitcoin rose $2,677 and currently stands at $44,379. So it's done well these past 2 weeks. Now let's look at equities. The Dow Jones closed on Friday at 34,861. A good day, up 153 points and up 107 on the week. The S&P closed at 4,543, up just 22 points on the day and up 80 points on the week. And the Nasdaq Composite closed at 14,169, not so good on Friday as it was down 22 points, but it still managed a rise of 276 points for the week. Now, unfortunately, oil prices have reversed their very recent trend and are on the way back up. Quite strongly, unfortunately. We now have Brent crude closing at $120.65, that's up $12.72, and WTI crude closed at $113.90, nearly $114, and that's up $9.90 on the week. The dollar index has held firm. In fact, it hasn't moved that much during the course of the week, stands at 98.78 and is up 0.55 on the week overall. Now, we concluded last week's video with the following forecast. We see gold trading between 1850 and 1975, with 1800 to 2000 as outliers, and we see silver trading between 24 and 26, and 23 and 27 as outliers. We didn't really expect to see the outliers unless something significantly happened geopolitically, which, although the situation in our view is marginally getting worse day by day, nevertheless there was no major announcement to cause a severe shock rise, as we would call it. So, as a result, both gold and silver operated within our normal range for the week, and in some respects within relatively tight or modest bands. The difference between gold's high and low was just $55, compared with $95 the previous week, and for silver the difference was $1.25, higher than the general disparity of around $1 to $1.10, but lower than the previous week's difference. Now, in our video published on Thursday, we announced the fact that from now on we are producing videos on Thursday, Saturday, and either Monday or Tuesday. A lot will really depend on what happens on the weekend. And as we'll see in a few minutes' time, there has been something occurring today which may necessitate our producing a video on Monday, but much will depend on what is actually said after President Joe Biden has made his announcement. We'll come to that in a few moments' time. So going back to our video published on Thursday, we highlighted the fact that gold and silver began to rise quite sharply, primarily but not exclusively, because of NATO's worries over Ukraine and the potential threat of biological or nuclear warfare not being entirely off the table, or at least a serious threat of it. And that video is entitled Gold and Silver Prices Spike on NATO Worries. Now, there was not a great deal of data published last week, but as we highlighted in the weekly update, Thursday was likely to be the most important day in terms of price movement, which really proved to be the case. Notable for comment last week, disappointing home sales for February, and negative and disappointing durable goods and capital goods orders, but we did have improving jobless claims, that is, they were lower, and improving S&P market manufacturing and services flash PMIs, which may very well have some relevance for this week when we get the finals coming through. So it was slightly a mixed bag. Now this week we have a plethora of data. Not so much on Monday, Tuesday, but thereafter. So on Monday we have the Trading Goods Advanced Report for February. Tuesday, job openings and quits for February and the Consumer Confidence Index for March. That's always worth a look. But then we start to see the heavy stuff coming in. On Wednesday, we have the ADP Employment Report for March, which often is an indicator of the non-farm payrolls. On Friday, we have the GDP revision for quarter 4, gross domestic income for quarter 4, and corporate profits year on year for quarter 4. That's all on Wednesday. Then on Thursday, we have the weekly jobless claims, nominal personal income, nominal consumer spending, the PCE price index, look out for that, real disposable income and real consumer spending, all for February. And we also have thrown in the Chicago PMI for March. And then on Friday, non-farm payrolls, unemployment rate, average hourly earnings, all for March. Very, very important. And also important, the final market manufacturing PMI and the ISM manufacturing index, both for March. And on top of that, if that wasn't enough, we have motor vehicle sales also for March. And not forgetting construction spending for February. So a truly significant week for data, and especially from Wednesday onwards. Now, we've got to put that into context. The next Fed FOMC meeting is not until the 3rd and 4th of May. And therefore the data this week, whilst normally would prove critical, we suggest that with another set of data to be published before May, and Russia and Ukraine dominating the headlines, this data will unlikely have the same level of significance it would normally have. Important, crucially important, though it is. Now that said, analysts and traders will respond to it, no doubt, but perhaps less than usual. Now, of course, much also depends on what is announced and how far from expectations these figures prove to be. So let's now go back to gold and silver and how they look from a technical viewpoint. Though, as we've said really over the last few weeks, particularly with Russia and Ukraine being in the headlines, the technicals are actually achieving, in our view, less importance. So gold, we have support near the 10-day moving average of 1937 and resistance at the March highs of 2070. But before we get to these figures, we have near support at 1950 and extremely strong support underneath at 1900. We have resistance at 2000 and 2050 before we get to these all-time highs of 2070 or March highs of 2070. The fast stochastic is pointing to a sell signal, while the MACD suggests consolidation. Now for silver, we have support at 25.14, which is where the 10-day moving average lies, and £25 underneath, and then 24.50 beneath that. And we have resistance at $26, though that could be shattered if what we suspect might happen does happen. Now the fast stochastic suggests a converging sell signal, while the MACD suggests an upward trend in price. Now the dominating factor, of course, is Russia and Ukraine. And President Biden announced in Poland, literally an hour before I'm dictating this, and probably 2 hours before it goes live, that Putin cannot remain in power after the Ukraine invasion. Now, this is what he said, quote, "We need to be clear-eyed. This battle will not be won in days and months. We need to steel ourselves for the long fight ahead. For God's sake, this man cannot remain in power." Now, whether he meant Putin has to go, or whether he meant he can't remain in power in Ukraine at this precise moment is unclear. But if this is not walked back, then it will undoubtedly intensify the situation. And if left unchecked, or even more so, the White House doubles down and says, yes, Putin has to go, then we can expect to see some serious movements on Monday. Though we will be surprised if they do that, but who knows? We're entering dangerous yet interesting times. So we are therefore expecting potentially larger price movements this coming week. As I've said, much depends on how the White House responds to what Biden said literally an hour ago. So therefore, with that in mind, we see gold trading between $1925 and $2,025, with $1,875 to $2,100 as outliers. If, of course, the White House does double down, which politically we can't see, but who knows, then even that figure will be surpassed. We see silver trading between $25 and $26.25, with $24.50 and $27.50 as outliers. What do you think? Do share your thoughts. We would very much appreciate them. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And depending what the White House dictates will direct us as to whether we produce a video on Monday or on Tuesday. Finally, we wish you a safe, enjoyable weekend and prosperous and interesting week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.